Let's understand 5 investment possibilities and choices. Each of us has several options and alternatives when it comes to our decisions regarding choosing how we invest our money. The purpose of this article is not to provide investment advice, but, rather, to attempt to clarify the differences, possibilities. It's your hard-earned money, so the more you know and understand, the better you might be capable of making the wisest personal decisions. With that in mind, this article will attempt to briefly consider, examine, review, and discuss these 5 choices and the most significant impacts. 1. Bank. Some feel most comfortable putting their funds in the bank with interest rates. Although the protections and insurance banks offer make it safe, it also usually translates to a relatively low rate of return. We currently exist in a very low interest financial environment and relatively low inflation. Historically, bank returns are nearly always lower than the cost of living. 2. U.S. Treasury obligations. The United States Treasury depends on a variety of debt obligations, with various limitations, due dates, terms, etc. They are usually distinguished between bills and bonds, and are considered the safest possible investment. Obviously, because of this, they generally pay lower interest/dividend rates than corresponding corporate municipal bonds. 3. Municipal bonds. When municipalities, such as cities, states, and various municipal agencies need to borrow funds, they generally rely on using municipal bonds. When one invests in a municipal bond, which is from the state you reside and pay taxes, the interest received is tax-free. 4. Corporate bonds. When corporations borrow funds, they often offer corporate bonds as their financing vehicle. These are often rated based on the overall financial picture of the company. Some of these are backed up by the full faith and earnings/assets of the corporation, while some are only covered by a specific project, etc. Depending on the rating, terms, type, length, and quality, the coupon rate is determined. These payments are taxable and may make sense or not, dependent on one's circumstances and needs. 5. Mutual funds/individual stocks. One may also decide to invest in a variety of individual stocks, or discover that investing in a mutual fund. Remember, there are never guarantees when investing in stocks. But they sometimes offer more potential. A mutual fund is a managed group of stocks and bonds with a specific purpose. There are several reliable organizations that evaluate and consider a variety of factors, and then rate them. Finally, the more one knows and understands about the options and alternatives, the better he becomes capable of proceeding in a wise, prudent, well-informed manner. These 5 approaches are simply the tip of the iceberg, and the more you know, the better prepared you might be.